We have lost that connection, but yes, as Rima is pointing out, we are losing those levels rapidly. Look at Nifty Bank; it's down 750 points right now, and across the board there is selling that has come through. So at the day's low, we have something like an IndusInd Bank, SBI, ONGC also is at the day's low. So this fall that we've seen in the last couple of minutes has really come in from some of these banking names and Adani stocks as well. We'll try to get that connection back, but for now, let's also look at some other stocks in the broader markets which are declining. And this is our special Midcap Spotlight segment, looking at Heranba Industries because that stock is down 20% in trade right now. It is at the lower circuit and it has been a weak performance on a YY and on a quarter-on-quarter basis. Revenues are down 30% on a YY basis, EBITDA down 67%. Margins have taken a sharp hit, 8.6%. That's a 940 basis points cut, and profits are down 76% as well. That's not only on a YY basis. In quarter-on-quarter, revenues are down 34%, EBITDA down 64%, and profits are down 73%. Company says that they saw challenges in their domestic technical demand. Demand was low due to challenging market conditions and lower inventory, with higher inventory as well. Once demand comes back, they do see that, yes, prices should go back to earlier levels. China opening up is also positive for them, and that's why they expect quarter 4 to be better in China than quarter 3 as well. Export demand is impacted due to challenging macroeconomic conditions and higher inflation as well, and contraction in the margins is due to high raw material prices and elevated fuel costs as well. So yes, they've cut their guidance as well. Now FY23 revenue is expected to be flat versus earlier 15 to 17% growth, and this will be led both by their volumes and pricing as well. EBITDA margins also, they look at 12 to 14% now versus 15 to 17% earlier. Weak numbers, guidance cut definitely not working well for the company, and the stock is down 20% in trade.
There's another one, BEL, Bharat Electronics. This was the darling of the stock as investors were latching on to the defense theme, but the earnings were a miss, particularly on margins. And this is the third consecutive quarter that the order book has declined. Right? So the company is executing, so you are seeing top line growth, but clearly new orders are not coming in and filling in the pipeline. So the order book has declined for the third consecutive quarter in a row, and the stock is getting punished today, plunging close to about 7%. This is a stock which is, doubled in a matter of 2 years now. 2 years back, the stock was at 40 rupees. The high, the 52-week high, was 112. So from that level, it's off about 25%. But, today it's coming in for some amount of punishment. It's time now for the CNBC-TV18 budget quiz. Remember, there are prizes to be won every day. We gave you the question at 9:14 a.m. today, but just in case you missed it, here is today's question. What percentage of the expenditure in budget FY23 was allocated to defense? And your options are 7%, 7.4%, 8.7%. Send us your answers on Twitter. Post your answer as a comment on the question tweet on CNBC-TV18 News. Use the hashtag #BudgetWithCNBC-TV18. Hurry and send us your answers. Remember, we'll announce the winner at 3 p.m. today.